What's up? Ryan Lee here with Planet Cheapskate, popping on to give you your rate update going into the weekend so you know exactly what the rates are going to look like when you're out looking at the open houses, when you're at showings, when you're doing all that stuff. You know exactly what to expect whenever you have that estimate in front of you. Are they giving you a good rate? We'll see. Lots of action going on in the market this week. The Fed did convene, and they agreed to hold off any rate change for this session. There are two more sessions in 2023, and so we don't know, but. That was good news, and it did not affect the market because the market was kind of expecting that. But what it was not expecting was the when they get together, the next day they meet and they talk like little schoolgirls, like we all talk, and that's the stuff they didn't like. The comments, because the comments led the market to believe that they are going to be keeping the rates higher for longer into 2024, whereas we were thinking that inflation comes down, uh, you know. The job market's not looking that great. It's more people working part-time jobs than full-time jobs, and you know, things are just kind of on the edge. We're flirting with recession, a lot of negative factors that we were thinking that they would be, moving the rate down into 2024. Well, based on their comments, they're going to keep them high as long as they can. And which is very unfortunate because it looks like inflation is moving down. And, our numbers are always based on the past. And so, a lot of the brighter minds than you or I are saying that, hey, inflation, it's gonna have a little lag, but it's gonna be caught up. It's gonna be, right where they're wanting it in the 2% range. So that did affect the markets kind of negatively. So it's been just kind of a down week. Had some very difficult loans, and made for a very interesting week. But want to start out, good luck to my realtor partners out there. If you need anything this weekend, let me know. I am working when you work. If you need those pre-approvals, I can crank those babies out in 10, 15 minutes. We'll get you good to go. You'll have certainty that your borrowers are pre-approved, their income's been verified, their assets have been verified, their credit's been verified. You're good to go on your pre-approval. Work with a independently federally licensed mortgage broker to have that certainty on that pre-approval. Wanted to say I have a podcast starting up. It's called Talk is Cheap because, it's Planet Cheapskate. So the Talk is Cheap podcast. If you would like to be a guest, reach out to me. I can get you on. I'm trying to feature a lot of real estate folks, people in the industry. I'd love to bring you on. We can talk about how to keep things cheap, what you bring to the table, to the equation in the real estate industry. And yeah, be sure to check my first one out. I had my guest is Karin Prom Karin McCon Prom. I get her name wrong. It's a tricky one for me to say because she has an Irish accent, hard for me to understand and match her vernacular. So it makes for some funny interaction. So be sure to check out that podcast. And I wanted to start a little bit just before I got into the rates, talking about a product that's for investors that's called a DSCR loan. And I've been doing more and more of these loans. They're very, very cool. And let me tell you why. All your income that you have, when self-employed people struggle with wanting to minimize their taxes as much as possible. People, W-2 employees may not make enough or whatever. On a DSCR loan, your income doesn't matter at all. All that matters on a DSCR loan is, does it make financial sense? And when I say financial sense, I mean, does the rent that you're going to be collecting on the property offset the money you're going to owe to the bank? And then also, what's your experience level with doing investment properties and credit? So those three things. If you have good experience doing investment properties and the financials on the property make sense and you have good credit, a DSCR is something to look into. It stands for Debt Servicing Coverage Ratio. And all that means is that whenever we factor in that full payment you have for that property, and then we factor in that full monthly rent that you get in, the rent over is over and above what you owe the bank. You got that at least by at least by one. So for instance, say uh, your total mortgage is 800 and then you're collecting 850. That's going to work. Now if your total mortgage is 800 and you're only collecting 750, not going to work. It has to at least add up. And you want it to be more, because the more it adds up, the better your terms are going to be. But DSCR, check it out. It's a great product. And for some of you investors out there, I'm doing more and more of these, and they're a breeze, and we can close them hyper fast. I mean, you know, 2 weeks, 10 days, 2 weeks. If everything makes sense, we can get these done super fast. So, ladies and gentlemen, in my right hand, I have this week's rate update. Now, before I get into it, just to explain these rates, these are not rates that you can go to your bank, you can go to your credit union and demand. When you go to your bank, when you go to your credit union, when you call them on the phone, they're going to give you whatever rates they feel like they can get away with. What I do is I make 50 of the most competitively priced banks all over the United States compete every Friday. I take an average borrower, someone looking to borrow $250,000 with a 700 credit score, and this is for a 30-day lock. I never charge any points on these, and that's my rates. So, without further ado, let's get right to these rates. Conventional is at 7.75 with an APR of 8.048. FHA is at 7.125 with an APR of 7.847. VA is at 7.125 with an APR of 7.339. USDA is at 7.125 with an APR of 7.582. So that is the rates. They're not good because of the Fed not being able to keep their mouth shut and freaking out the markets. So, if you're an investor out there, look into a 10-year treasury because they're at record highs right now. They've never been higher since I think someone was saying like 2020. So, 3-year high because of the Fed and their crazy negative comments about keeping our rates to the moon for longer. But you know what? There is relief because there's no better investment long term than owning real estate. In the next 5 years, and just by modest factors, very modest factors, what I did was I took the average of a 63-year average. I took uh, a 5-year average, and then I took the average over the last 3 years, added them together, averaged it out. And if you were to do that and you were to buy a property today, 5 years from now, based on that average, you will have, depending on the property, and this is in Wichita, Kansas, between $40,000 to $60,000 in equity added to that property. That's the reason is because the dollar is worth less and less and less versus real property. A real estate asset, nothing compares to that return. So, yeah, maybe the rates are going to be high, but you know what? You can refinance that rate. Don't miss out on that equity. The next 5 years, the equity built in the house is going to be unforeseen in throughout all of history. The amount of equity you're going to build, it's money just literally coming out of thin air. What I mean by that is that if you buy your house at $150,000 today, in 5 years, it very well could be worth $200,000 without you lifting a finger. Money out of thin air, $50,000 out of thin air. Okay. The average is 40 to 60. So I just kind of split the difference in that, and that's where I got that. But look into that. Hope everybody has a happy and safe weekend. I will see you on the other side. And don't forget to check out the podcast. Oh, before I forget, also, I have a first time home buyer seminar with Karin coming up on the 30th of September. You don't want to miss that. It's going to be awesome. I'm going to reveal some awesome hacks. Also, if you're in aviation or a veteran, a local legends program, you could get up to 0% down and have $737 covered cash back to you. It can offset your loan cost, it can offset your appraisal, it can just be a check back to you at closing. You're not going to want to miss the details of that. Come out and see us, First Time Home Buyer Workshop Seminar. I'll see you guys on the other side.